Good evening, and thank you for joining us on this busy Wednesday night. Tonight, we begin with the state of the American economy and the battle against inflation. The Federal Reserve today making an unprecedented move to try and tamp down rising prices by raising interest rates by 75 basis points. That means the central bank's back-to-back rate hike of a combined 1.5 percentage points since June is the most since the 1980s. Wall Street anticipated the move and stocks rallied in afternoon trading. All three major indexes scored triple-digit gains, with the tech-heavy Nasdaq jumping more than 4%, the most in over 2 years. As the price people pay for consumer goods climbed to a 41-year high in June, today's move is designed to slow the economy without causing a recession. And it comes as mortgage rates have soared, doubling since the beginning of the year. We have a lot of news to get to tonight, and CBS's Kris Van Cleave will start us off from Chicago. Good evening, Kris.
Norah, tonight, Fed Chair Jerome Powell says the U.S. is not in a recession yet, but the path to avoiding one is getting narrower. In fact, he did not rule out another significant rate hike in September. What this move today means: it is likely going to cost more to borrow money, be it a mortgage, a car loan, or even debt on your credit card. It was another aggressive move by the central bank, pushing its benchmark rate to the highest in 4 years.
We're not trying to have a recession, and we don't think we have to. We think that there's a path for us to be able to bring inflation down while sustaining a strong labor market.
The Federal Reserve's move follows consumer prices shooting up more than 9% in June compared to last year. KPMG chief economist Diane Swank. How does making things more expensive bring prices down?
Well, that is exactly, unfortunately, how you bring prices down, is by increasing the cost of doing business.
When does that mean I can stop paying $12 for a loaf of bread?
Stephanie Caltagirone owns Magpie, a restaurant in Rockford, Illinois.
I'm not even breaking even.
Surging costs for everything from hand soap to staples like eggs, wheat, and vegetables mean inflation is eating away at her bottom line.
Things that haven't gone up, they've added a fuel charge too. When your corned beef goes up by more than double, I can't charge double for what I serve people, or else, I won't have any customers.
Stephanie is trying anything to cut costs.
Otherwise I would just be sitting at my home office trying to figure out how to make a profit in a world where I can't.
Trying to figure out how to make a profit in a world where you can't.
Yep, it's pretty depressing.
But you keep trying.
Can we take a break for a minute?
Sure.
It's depressing when you say it out loud.
Stephanie says she's not going to give up on her dream yet, but she's got to find a new way to make it work. Tomorrow, Wall Street is going to be watching another key economic indicator, GDP. It's expected to show 2 consecutive quarters of negative growth. Traditionally, historically, that is a sign that a recession is looming. Norah?
Kris Van Cleave, thank you.